So in this video, we're going to prepare adjusting and closing entries for the general fund in comparison to the supplies. So we've got this information where we use the purchases method of accounting for our inventory of supplies in the general fund and a periodic inventory system. So the amount of inventory used during the year and the amount on hand at the end of the year are determined by a physical inventory account. So during the year, we recorded 220,000 of supplies were purchased and recorded as expenditures, and these are included in that expenditures balance of 6,192,000. And the physical inventory revealed a supplies balance of 152,000 at the end of the fiscal year. At the end of the previous year, we had 140,000 in inventory. So what we're going to look at is, one, we're going to do the required adjusting entry in the general fund ledger for the supplies. So we're going to record, we've got in our general fund, we have inventory of supplies, and then we have our fund balance non-spendable inventory of supplies. And then let's debit and credit here. Okay, so we have a debit of 12,000 and a credit of 12,000. So that's the first thing. So then in 2, it says provide the required journal entries to close the operating statement and budgetary accounts at the end of the year. So we're going to close these accounts here to the appropriate amounts. So when we're looking at we've got estimated revenues, budgetary fund balance. So first we have, in our general fund, we have appropriations that we recorded. Just copy these amounts down. We're going to debit appropriations to close it, and we're going to debit estimated other financing uses to close it, and then we're going to credit estimated revenues and the budgetary fund balance. So now we've closed the budget accounts. Now we're going to close the other accounts, the revenues and expenses, just like you would for a regular business, that you would close the revenue and expenses. So now we're going to close revenues by debiting it and fund balance unassigned. And then the expenditures and other financing uses. So this is all under the general fund also. So we have actual revenues, our fund balance unassigned, of our expenditures, we're going to get to the fund balance unassigned because it's a plug. And other financing uses. Okay, so here we have debits have to equal credits, and so we use a plug here that goes into fund balance unassigned. So we're going to, because we had total expenditures greater than revenues, we're going to have to take some of this, we're going to reduce this fund balance unassigned in order to balance out the fact that our revenues were less than our expenses. Okay, and so those are the adjusting and closing entries. This example, we're going to look at the different methods of recording supplies transactions based on either the consumption method or the purchases method of accounting for inventory. So first we have in our general fund, so I'm going to put consumption method, general fund, and we're going to have our debit and our credit. I'm actually going to copy that over here. And we're going to change that to purchases method. We're going to go through the whole consumption method first. So, we have each transaction. On March 21st, supplies were ordered at an estimated cost of $847,000. So remember, when we order supplies, we record an encumbrance and credit encumbrances of outstanding. So we have an encumbrance for $847,000 and credit to encumbrances outstanding for $847,000. Then number 2, our supplies were received on April 4th and the actual cost of $850,000 was paid in cash. So for number 2, we need to reverse that encumbrance. I know, I need to work on the shortcut for that. So 847,000 and 847,000. Next, our inventory of supplies. So we received $850,000 in supplies and we paid cash. On number 3, we have $70,000 in supplies remaining at the end of the year, and we assume there was no beginning balance. So we're going to record that we had total supplies expenditures of $780,000. So this is the consumption method where we're saying that we expense the amount of supplies that were consumed during the year. So since we have $70,000 remaining of that $850,000, our supplies expense was $780,000. So now we have fund balance unassigned for a debit and fund balance non-spendable. So non-spendable because it's not cash, we have it in supplies, but it is an asset. And then we're going to record that we had fund balance. Oh, so got that. Okay. then we're going to record the closing entries. So we have the closing entries for our supplies account or our expenditures account. And our expenditures of $780,000 to close our expenditures account. So that would all happen on December 31st. Okay. Then we have another year. So then on the next year, we ordered at an estimated cost of $855,000. We received them, paid in cash, and then what we had. So this one's going to be a little bit different because we already had $70,000 in supplies at the beginning of the year, and we're doing by consumption. Okay, so now we're on February 23rd, and we order supplies where we record our encumbrances. I'm just going to record. I'm going to make this easy and copy and paste that. So we have our encumbrance for $855,000 and outstanding. Then on March 6th, we receive the supplies and pay $860,000 in cash. So we reverse our encumbrances and record that we have supplies that we paid cash for. Then we're on December 31st. We have $60,000 in supplies remaining, and we had a $70,000 beginning balance. Okay, so we had expenditures then. If we take $860,000 plus $70,000 and then subtract $60,000, we had expenditures of $870,000. And we used $870,000 in supplies. We had a $10,000 difference than our last year's inventory. So last year at the end of the year we had $70,000. This year at the end of the year we had $60,000. And then we're going to record the closing entry to enclose our expenditures. Okay, so those are the transactions under the consumption method. Now we're going to look at those same transactions under the purchases method. Okay, so we have the same at the beginning. We are going to do those two encumbrances, and then we're going to record cash. Okay. So everything is the same at the beginning. It's the end of year stuff that is different. So we recorded the creating of purchase orders and then the receipt of the supplies on April 4th and paying in cash. Now we're on December 31st, 2019, and $70,000 in supplies remain. So now we're going to record inventory of supplies that we have $70,000, and we have fund balance non-spendable of $70,000. And then we have fund balance unassigned and expenditures. So here we're expensing the entire purchase of the $850,000. This is the purchases method versus the consumption method. Okay. Then the second year, we have exactly the same thing. We have our encumbrances, receipt of supplies, and payment of supplies in cash. And then we have the adjusting entry and the expense. So we have our fund balance, non-spendable, our adjusting entry to say that we now have $10,000 in supplies at the end of the year of $10,000, and then we have our fund balance unassigned and expenditures, except now it's for $860,000 because under the purchases method we expense exactly what we purchased. Okay, so that's the comparison of the two different methods. Okay, now the third way is under governmental activities. So if we have, look at this, and I know this video is getting a little long. Sorry, I just want to get through this last method, so these are all together. So we have governmental activities. Okay, so we have one, we created the expenditures. So under governmental activities, no journal entry when we record that. Okay, then we receive our inventory of supplies of $850,000. So this is on April 4th. Okay, and we pay cash for those supplies of $850,000. Then on December 31st, we record expenses and we reduce our inventory of supplies for $780,000. And then we close our expenses to our net position. Okay. Then in year 2, we have the exact same situation, but with different numbers. Okay, so when we create a purchase order, we don't record anything. Then on the day we receive them, we record that we received supplies and we paid cash. And then we had expenses of $870,000. And we close our expenses account to net position. Okay. So then what does that do to how do the different methods? So under the different methods, we see that we have just slight differences. What really the main difference is when those expenditures get recorded, and for a little bit of the amount. So, of course, we record expenditures here, and then we have the remaining amount. Here we have expenditures for the full purchase amount instead of what's remaining. So, of course, that governments get a choice on which one of these consumption methods or methods that they use for accounting for inventory, supplies inventory.